Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity Mates.
Welcome to another episode of Equity Mates. Our aim is to help you on your investing journey, break down the barriers from beginning to dividend. Whether you're an absolute beginner or Warren Buffett, we guarantee Equity Mates will have something for you. My name is Bryce, and as always, I'm joined by my equity mate, Ren. How's it going, bro?
I'm very good, Bryce. We're back for 2021.
Back for 2021. I've come in with a new intro.
You have. I didn't want to say anything, but there was a little bit of a stumble out of the gate.
There was.
Doesn't bode well for what the year will hold.
Look, I'm just dusting off the cobwebs, so please forgive me. And I promise next time we come in, it'll be hot.
Hey, Equity Mates, you heard him. Hold him accountable to that.
So yes, back for 2021, first episode. We've just finished off the summer series with Superhero, which was a lot of fun. Hopefully our audience, hopefully you guys got something out of it.
Yeah.
But hey, new year, new Equity Mates, ready to rock and roll.
No. New year, same Equity Mates with a little bit of twist.
Yes.
With Equity Mates with Lime.
Equity Mates with Lime. So what to expect this year? We've spent the summer redoing some of the formats for some episodes based on the feedback that we've been getting from you over the last sort of 12 months or so. We've also revived the Get Started Investing podcast, which is a second podcast that Alec and I started back in 2019, end of 2019, that is all about the fundamentals of investing. So if you feel like what we're discussing in this podcast is often going over your head, we would suggest going and starting with that podcast and then coming back here. So we'll be doing a weekly episode on that as well.
I mean, I would suggest listening to both.
Of course.
Yeah.
We've got a new contact form on our website, equitymates.com/contact. There's a whole bunch of stuff that we'll be referring to throughout the episodes and throughout this year that you can go and provide us with some information. We really want to bring you guys on the show.
Yeah.
And this is an opportunity for you to provide information for us, to give you a call and bring you on the show. The best part, Ren's been coding all night to get the voice recording component.
Yes. A lot of code. A lot of code.
Must be nice. A lot of code. And you can go onto the website and leave us a voice message, and then we're going to be able to play that voice message on the show, so you don't even have to talk to Ren and I if you don't want to.
First message recorded was someone telling us that they support the Gold Coast Suns. Great to hear. Appreciate that comment. Probably not going to play it on the show.
Yeah.
I think if you record something, tell us who you are.
Yes.
And
just the basics.
Give us more than a sentence. It would be my two requests. But hey, if you want to just send us a little private message, you can still do it. We won't play it on the show.
We won't play it on the show. Well,
we might.
Pending.
Yeah.
What we would love to hear from you, though, are your stock pitches, be it through the voice recording software that Alec has coded in hard to the website, or be it through whatever means, all of our social channels. We're going to be really focusing on the portfolio this year, and as part of that, we want more stock pitches from the Equity Mates community and want to hear what your ideas are.
If you are going to record it as a voice memo, you've only got 90 seconds, though, so you're going to have to be sharp on the pitch.
Don't send 10 times 90 seconds.
If you want to record it and then we can call you on the show and have a bigger conversation, we can do that, or you can write it in. Hey, basically, however you want to contact us, we're trying to make it available.
That's right.
Yeah.
Yes, making it as easy as possible. To close out what is happening in 2021, Ren, very exciting for Equity Mates Media. We've got some new shows launching.
Yes.
Which is going to be great. The 14th of Feb is the launch date for one of them, Valentine's Day.
Yeah.
And then we've got another one launching not too soon after that. If you would love to also launch a show, hit us up. We're always open to ideas, and we can help support that. So keep your eyes tuned. Ears tuned? Not a good start.
So, Equity Mates, to peel the curtain back a little bit, there's this running gag.
Peel the curtain back?
To pull the curtain. Well, this really this makes me look like a fool for what I was about to say, which was Bryce in our friendship group is known for Leskyisms, where he takes two sayings and mashes them together in some strange way. But I think I just did that as well.
It's contagious. And most exciting is the Equity Mates TV show that we have just launched on AusBiz. It would be out now, 27th, launched last week.
Yep.
And Alec and I, 4 days a week, 4:15 on the AusBiz streaming channel. You'll be able to catch us for sort of 15, 20 minutes each day, talking about everything not related to what happened on the markets that day. We're going to be taking a bigger picture view on what's going on in the world of finance and investing. So make sure you tune into that. It will be streamed as well as available on demand through the AusBiz app and on our YouTube channel. So make sure you subscribe to both of those.
Yes.
Phew.
Take a deep breath. You've got through the updates. So, Bryce, one more thing before we get into the meat of today's episode. We've had a few equity mates reach out and ask how they can support what we're doing here.
Yep.
We've obviously gone full time, and now we're trying to keep the lights on and a roof over our head.
Yes.
You've got a very lavish lifestyle
That is not true.
that you're trying to maintain.
Not true. Not true.
For people watching on video, zoom in on Bryce's hair and look at how much product's in that
There's
thing.
nothing in here.
But we have now set up an ability to support Equity Mates, equitymates.com/support. If you love what we're doing here, if you think this content's valuable, if you want us to be able to spend more time making content rather than trying to get sponsors for the show, please support us, but don't feel like you have to. This content's going to remain free. This is just if you want to support what we're doing and you can, it would be greatly appreciated.
Nice. equitymates.com/support. All the information will be there. It's a non-committal donation or ongoing recurring sort of payment. So we would very much appreciate anything that you can throw our way. So should we get stuck in?
Let's do it.
Finally.
So after talking about how we hope that people find our content valuable, we're going to do perhaps one of the least valuable but most fun episodes that we always start the year with. And that is we're going to throw out some wildly bold predictions for the year ahead.
Yes, that is right, Ren. Bold predictions for 2021. We do it every year, bit of an Equity Mates tradition now, and usually we take a beer each on the bold predictions. So let's continue in that vein.
Yeah.
No time like the present.
Yeah, I think before, even though you've just said no time like the present, before we get into it, look, there's heaps of people that make predictions every year, and most of the time they're wrong. So we're just leaning into that. We know that most of the predictions that you make every year are going to be wrong. So that's why we're going big and we're going bold here. So we don't necessarily expect them to play out. There's some thought behind each of them, but you would not be taking these predictions to the bank. Let's just put it that way.
No. Bit of fun.
Bryce predicting a market crash for like 4 years in a row to kick off this podcast.
And let me tell you that this time it is not, it's quite optimistic.
You're quite optimistic.
Yeah.
Oh, about time. 4 years in and we finally cracked a smile, hey?
Who knows? All right, do you want to kick it off, Ren?
Sure. Actually, no, you know what? I want you to kick it off.
Okay. Look, there is a whole preamble that I thought I could do around the context and everything, but we might leave it for another episode and just get stuck into the bold predictions. So I'm going to start at a macro level. And I think firstly, I feel like I'm going to be starting the year with a proceed with caution sort of sign on the front of anything that I do, whilst everything seems to be going along quite nicely at the moment. It feels like, once we move past the election, the markets are a bit frothy at the moment. Anything is possible. However...
I thought you said there wasn't going to be a preamble.
Sorry. Bold prediction number one, the S&P500 and the ASX200 will both finish the year up over 15%.
Wow.
Yeah.
That's pretty bullish from you.
Yeah, that's bold.
It
It's
is bold.
Now, a few reasons behind this. I feel like the US might potentially suffer a bit of an economic slowdown now that Biden's in and might take more control of the COVID situation, force some sort of a shutdown that Trump was just not willing to do. However, we know that there's a divergence at the moment between the economy and the markets. So if that were to happen, and I'm sure you're going to talk about it, Ren, then there's going to be some levers pulled by central banks even further, particularly if markets start to fall. And I think with huge stimulus packages likely to come through, incredibly low interest rates, and potentially in Australia, a bit of a pre-COVID I guess, resurgence in some of the parts of the economy that have suffered over the last 12 months, it's all sort of pointing towards a pretty favourable equities market.
Fair enough.
So, yeah.
Nice one. All right. Very bullish from you.
Are you going to take that?
Oh, yeah, we take them or we don't take them. Yeah, sure, I'll take it. Yeah.
Okay, nice. What do you got?
All right. I am going to stay macro, I guess. The US Federal Reserve, when markets get choppy, they are now in the habit of printing money and using that printed money to buy bonds. At the start of 2020, they had about $4 trillion worth of assets on their balance sheet. During COVID, that's increased to about a bit over 7. My bold prediction for 2021 is that the Fed's balance sheet increases to over $10 trillion.
So just to explain that, you think the Fed will buy $3 trillion more of assets this year to do what?
I think if so it's like once they realize that they've got a tool that works, they're just going to keep using it. And they did it first during the GFC and it worked. They did it again during COVID and it worked. And now I think it's almost going to be an automated response whenever markets get a little bit nervous and start falling, or there's any issues, their response is print money, buy bonds.
So then really is the underlying prediction here that you think something's going to happen in the markets to trigger this event?
I'm not saying that, but I wouldn't be surprised. Yeah. I think valuations are pretty stretched. Although we're seeing some good reports come out of the US at the moment, there's a lot of zombie companies, which are, companies that basically can't cover their interest payments. And then there's a lot of unprofitable companies. It just feels like a frothy environment at the moment. Yeah.
Okay. I will take that.
Okay. Nice one.
Number 2 bold prediction for me, Ren, is that word on the street is that Libra is coming this year, Facebook's cryptocurrency. I'm predicting that we will see a central bank trial its own form of cryptocurrency.
I don't know if that's bold, but I don't even know if that's a prediction. I think that's already happening.
It hasn't. The Swiss have done a wholesale digital currency, but there hasn't been one where they've trialed their own cryptocurrency. So,
right.
Yeah. I feel like that's pretty bold, but if you don't think it's bold enough,
what about China's central bank digital currency, CBDC?
Doesn't count. Doesn't count.
Okay.
How have they trialed that?
The Asian giant completed a trial in September and is currently rolling it out on major e-commerce platforms within the country. December 9, 2020.
No, I don't think so. I don't think so. No.
Well, I am definitely not going to take that.
Excluding China. That's bullshit. It's China.
Well, no, I agree with you. I think it will happen. Although, it's not is it a cryptocurrency if it's not decentralized, or is it just a digital currency?
Yeah, well, I guess digital currency.
Yeah. Anyway, let's not get too in the weeds on crypto. We've kicked off the year with Federal Reserve bond buying and cryptocurrency. we need to really right this ship, and I'm going to right this ship with a simple one. Netflix, the streaming service, will finish the year down. Its share price will be lower at the end of the year than it was at the start of the year.
Okay. Any reasoning?
So I did some back of the envelope maths. Foxtel cost about $60 a month. And in America, cable was more expensive, but I guess the example still holds in their context as well. So Foxtel about $60 a month. If you add up all the different streaming services you now have to subscribe to get the same content you got with Foxtel, Netflix $11 a month, Stan $10 a month, Binge $10 a month, KO $25 a month, Amazon Prime $8 a month, Disney Plus $9, and I don't think I've missed any, but it comes to $72 a month. So I just feel like we're reaching an oversaturation point, and I feel like something's got to give, and people are going to be not willing to sign up to more and more subscription services. I don't think Netflix has a clear content advantage in Australia. There's not really any network effects other than like being able to talk to your friends about the shows you're watching. But, you know, me having Stan, you having Netflix doesn't really harm us in any way. Like us both having Netflix doesn't make it more valuable. So I just feel like Netflix its growth rate will slow. And then the second part of it is Netflix has been taking out debt for years and years to fund their content strategy, which has worked because it's led to crazy growth. But if that growth slows and that debt starts coming due, the market might re-rate Netflix. Now, I say that with the full knowledge that 2 days ago, or when people are listening to this last week, Netflix released a crazy report and was up like 10% in a day.
I think it was up 17% last night.
Yeah.
We're recording this on the 21st of Jan, so...
But still, it's a long year.
Yeah.
There's a lot to play out, so I'm not going to change my prediction.
Without going too much into the weeds on this, it's probably worth another episode to fully explore, but I think we're going down the route where you might get an Apple come out and provide an iPhone that you pay a reasonably large subscription, get the iPhone, all the Apple products, and I might talk about this a bit later, but you also then get all the services through the Apple TV or whatever it may be. So
maybe that's basically just cable. Like that is what cable is.
Which it's going to go that way for sure.
I don't know. I think that a lot of these companies like having the direct relationship with their customer and would be reluctant to go back to a cable model where they have an intermediary that they deal with. You know, like Disney and HBO and stuff like that. Well, Disney especially want that direct relationship with that customer, and they don't want to go through a cable provider again. So I know I can see the logic around what you're saying, but I just wouldn't lock that one in.
Okay, Ren, so I'm going to jump in here with a bold prediction to do with...
Wait, hold on. Did you take mine?
Yes, I'll take that.
Okay, nice.
So I'm going to jump in here with a bold prediction for the ASX. It's a multi-part prediction here. First one is that technology sector will be bumped from the number one performing sector.
Okay.
And it will be replaced, this is I think kind of bold, by industrials, which includes construction, transportation, business services, waste management. Within all that, you've got airports, infrastructure projects, building products, like the Transurbans of the world, consulting, staff and employment services, you name it. So I'm really banking here on an economic turnaround.
Yeah, you're banking on a post-COVID.
Yep.
People are going to fly again.
Yep.
The government's going to do a big, let's rebuild Australia stimulus package.
Yep.
Just pump money into the sector.
Yeah, I think that it's been, if you look at the sectors that have obviously been hit hardest, it is one of the sectors that has been absolutely crunched. I think it'll outperform the ASX, and the bold prediction is that it'll be the number one performing sector, bumping technology.
Yeah, I think I'm going to take you on that. So I'll take the bet and say that technology will be number one performing. I think everything you said could be right, but technology still could outperform.
Of course, that's why it's a bold prediction. Yeah. I would love to have put retail consumer discretionary up there.
Well, it's killing it right now.
Yeah,
Some of the retailers that are reporting.
I know. But I just feel that they're killing it in relation to the first half last year. Like, it's not the base they're coming from.
Yeah,
not that impressive.
Yeah.
All right, let's move on.
All right, I'll stay in Australia, given you've taken us back home. Macquarie Group will break into the Big Four bank territory.
In terms of...
So market cap. So Macquarie Group's currently valued at about $50 billion.
Yeah.
The smallest of the Big Four banks is ANZ at $70 billion, and then NAB and Westpac are at $79. I think Macquarie will be bigger than at least one of those three banks.
I agree with that.
Okay.
Yeah.
So
I think that... well, I know that a lot of the stuff that they're doing in the agricultural space and ag is going pretty well at the moment.
Yeah, but is it going $80 billion well? Or, sorry. Yeah.
Yeah, I guess also the banks might also do pretty well this year. So, for the fun of it, I'll take it.
Nice.
Yeah. All right, just a quick one, Ren. House prices in Sydney to exceed 12% growth.
I'm seeing that article everywhere these days. Like, there was some report on ABC News that house prices were going to go up 30%. It's like, why is ABC News pumping property?
We know why. Australians love property. You taking it?
I just have no opinion on the property market.
That's fair.
I think, well, the regions are particularly hot. Like I was away over summer and there's a lot of chat about just how quickly houses are going. You know, real estate agents are cutting their commissions. The prices are just going crazy. But that could cool down the centres if people are moving away because they can work remotely. I'll take it. With absolutely no thought behind it and no view on property, I'll take it. All right, so I'm up, and I'm going to go back overseas.
Yep.
I'm going to say that in 2021, China's big tech, and we'll define who that is in a sec, but China's big tech, actually China's big five, let's call it, will outperform the US's big five in tech.
I need more info.
Okay. So the US, like, what would we say the FANG stocks?
Yeah.
Facebook,
Sack
Apple,
Netflix.
And put Microsoft in.
Yeah.
Well, no, let's do what did they call it now? Fan Mag?
We've got Amazon, Microsoft, Google,
Hold on.
Apple.
Do it in the so Facebook, Apple, Microsoft. No, Facebook, Apple, Netflix. I'm doing that Fan Mag. I'm trying to spell it. Microsoft, Amazon, Google.
Yeah.
So there's 6. I'm going to say China's, let's call it their big 5. So Tencent, Alibaba, JD.com, Pinduoduo, Duo, and Meituan. I feel like I'm missing a big one. But I'm going to say that bucket of Chinese big tech companies outperforms the US big tech companies.
I'll take it.
Okay, nice.
Yeah.
I've got a sub prediction there. Tencent, currently valued at about 800 billion, will be China's first $1 trillion publicly traded company.
Not going to take that.
Okay.
Yeah. I feel like for reasons that you will explain in the next episode. Okay, I'll keep it overseas. In the States, Ren, I think Zoom bombs and underperforms, and that there is a potential for it to be acquired by a Microsoft or Salesforce.
The acquisition thing for sure, no doubt.
I think it bombs, though. I don't think... I think it's...
How do you define bombs?
It'll finish down.
Even if it's acquired?
That's a sub. That's a sub.
I mean, you're banking on a very
If
specific
it's not acquired, if it's not acquired,
you can't do that.
Yeah. The bold prediction is it bombs if I've got it written here. If Microsoft and Salesforce to buy Zoom, but can you see it? You're colorblind. I wrote it in red.
I don't even know where that prediction ended up. Look, I'll take it. That's
Nice.
fine.
Zoom bombs and underperforms if Microsoft or Salesforce don't acquire it.
But you also think Microsoft and Salesforce will acquire it. All right. Okay. We've only got a few more.
Yeah.
We always end with an AFL one. Have you got an AFL one?
I don't, but I can make one up pretty quickly.
Nice. But we're not there yet. So this is... let's stay in the US. DoorDash, the food delivery app, will have a higher market cap than Uber.
I will...
And hold on, for context, DoorDash is currently valued at about 60 billion. Uber's valued at 108 billion.
Yeah, so are we going to see a DoorDash meteoric rise, or are we going to see a fall in Uber?
Maybe both.
Okay.
Maybe they'll meet right in the middle at around that $80 billion mark.
Nice. I'll take it, but I'd love to see it.
Yeah.
I'd love to. You threw a stat out off air that DoorDash has grown its market share from 17% to 50% in the States, which is, I think, phenomenal. Like, given, it's amazing, amazing.
Do you want me to give you the 5-minute spiel, or are we going to run out of time?
No, not the 5-minute. Can you give a bridge too?
All right, time.
Headline stats. Headline stats.
DoorDash between January 2018 and October 2020 grew between 17% market share to 50%. They've built a really strong recurring revenue program that none of the other food delivery apps have that starts to create some brand loyalty in a segment that didn't have any. But most importantly, they're also trying to become the Shopify of food delivery for businesses that want to run their own orders through their own app.
Yeah.
Similar to how Shopify provides the back-end infrastructure, DoorDash are doing the same thing. Best example is Chipotle, where Chipotle, you order through the Chipotle app, not through a DoorDash or an Uber Eats. But DoorDash provide that software and then provide the driver as well, or the rider. Uber, on the other hand, I think is now subsidizing two separate businesses. The thesis was rideshare and food delivery both have cars. There's a what's the word I'm looking for? There's a synergy there.
Yeah.
So let's try and do both. But now what we're seeing is that rideshare are cars, food delivery is more and more riders, and now it's two completely separate fleets of vehicles, two completely different sets of riders, and Uber are subsidizing both. And so I think DoorDash is focused on one thing, they're doing it better. Uber is focused on two things, and they're not doing food delivery as well as their competitors.
Nice.
Yeah.
Well, looking forward to seeing this play
Did I
out.
hit the 2 minutes?
Yeah, I think it was good.
Okay.
Yeah.
2021, the year I don't waffle.
All right, Ren, it looks like, staying overseas again. Airbnb, this is my bold prediction, Airbnb to be bigger than the top 5 global hotel chains.
Okay, I like this, but I need the details.
So we've got the Marriott, Las Vegas Sands, Hilton, Hajao. Apologies for the pronunciation of that, but it is one of the largest hotel chains in China. Intercontinental are the top 5 in the world based on market cap at the time of recording. Gives us a total market cap of about 230 billion.
Okay, and Airbnb is at...
Airbnb is currently trading at $161 and a market cap of 97. So it's actually fallen since doing this bold prediction research.
So Airbnb 97, those 5 hotel chains 230.
Yep.
And you're saying that Airbnb will be bigger than them.
Yep.
So
by
either
the end of the year.
some of those hotel chains are going to have to slide,
Yes.
or Airbnb's, probably both is going to have to happen.
Airbnb is going to have a huge year. But look, I just think it's a very bold prediction, but I think the moat that it's got in this space at the moment, and hopefully with a bit of a turnaround in economic activity and the ability for people to start traveling, that's the bold part about this. But yeah, that's my prediction.
I'll take it. I love Airbnb, but I feel like you're really asking a lot of them.
I am. I'm asking the right questions.
Yeah. All right, Bryce. So we've really focused on the US a lot, which I guess is an increasing theme for us as we realize how easy it is to invest over there and some of the companies over there.
Yeah.
I'm going to move away from the US and move to Europe.
Nice.
The UK has had a tough few years with Brexit, and now it's having a tough time with the coronavirus. But I think 2021 will be a good year for the UK. I'm calling that the UK stock market will outperform all the major European markets.
Come on, go bolder. Will it outperform the S&P 500?
I'm pretty comfortable with the boldness of my call as is, and I'm going to stick with it.
Yeah, okay. Other European markets, but equally other European markets, they're also having a tough time. So, I don't think it's that impressive to outperform the Italian stock market or
but
the
like
Spanish
the Germans
stock
and the French.
Maybe German, maybe French, Croatian.
True. Russia.
Russia. I think it will outperform.
Let's just keep naming countries in Europe.
I think it will outperform. I think it will. So I'm not going to take that. Yeah,
All right, fair enough.
All right, closing it out. A couple more to go. I think that Apple will hit $3 trillion this year. It's currently
Jesus, I'm definitely taking that.
it's currently 2.2 trillion. I think we'll see it hit 3 trillion by the end of the year, off the back of a number of things. But happy to go into that later. I might do it for the portfolio, but that's my bold prediction.
Yeah, taken.
Nice.
A company who's peaked its sales in its most
Doesn't matter.
profitable category years ago Don't get me wrong, great business, heaps of cash on the balance sheet, growing its services business, but it's a long time until its services business overtakes its hardware business.
So it took 42 years for it to hit 1 trillion. It then took 2 years for it to hit 2 trillion, and then with the majority of that coming in the last 5 months. The reason for that is that it's taken recurring revenue from 9% of its revenue to 24% in the last 5 years. I expect that with the introduction of more recurring revenue streams this year to push it to 3 trillion, because we know investors love recurring revenue.
Fair enough. Yeah. All right. Well, let's see how that plays out. I've got one more, and then we'll get into the AFL one to close it out. The traditional AFL ending.
Sure.
We sometimes try and pick the IPO of the year. So my last one, I'm going to try and pick the best IPO of 2021. Stripe, the payments platform.
Is it IPOing?
It's rumored to be.
Oh, wow. Nice. Bold.
So my bold prediction is 1, that Stripe does IPO in 2021.
Hopefully it
and
does.
2, that it's the best performing in terms of, and this is always a fraught conversation. Like, what does best performing mean? Because if the investment bankers price the company at like, $500 billion, it's not going to perform well because it started from such a high base. But similarly, if they price it at 5 million, it's almost guaranteed to be the best performing because they undervalued it. With that caveat in mind, let's just measure best performing as from IPO to the end of the year.
IPO opening price or IPO price?
No, actual IPO price, like price that shares were sold at.
Yeah. Okay, that's cool. I'm not going to take that because if I'm going to do an IPO of the year, then
we'll just go head to head.
Yeah. The amount of times that you've said performing in this episode as well.
Performing. Is that right?
You're going to get performing. You are going to get heat from this episode.
Now, of course I am, because you brought attention to it.
All right, to close it out, Ren, I think that Roblox will be the star IPO of 2021. And stick around for the next episode where I do a deep dive in Roblox.
Are you going to do Roblox as your stock of the year?
Let's just stick around for the next episode.
Wow.
Stick around for the next episode.
Wow. You've learned from my last year where, in hindsight, I should have just made Airbnb my stock of the year.
Well, let's discuss that in the next episode, stock of the year. But so we're both not going to take those ones. But that brings us to the end of bold predictions for the stock market. Obviously, we like to close out with bold predictions for one bold prediction for the AFL season.
I'm surprised there's a prediction that you didn't make that I was expecting you to make. Yeah.
Yeah, but I actually do have it right here, and we skipped over it because we were talking too much crypto. But if you want me to make it, I'll say it. Bitcoin to hit $90,000 by the end of the year. You're going to take
Currently
that?
at like 35.
Yeah.
I mean,
look, it's not out of the realms of possibility. It grew 300% last year, 300% this year, and you're at 90K.
And you just grow 300% for the next 20 years and you're a billionaire.
That's my plan.
That's why Bryce loves long-term investing.
That's my plan.
Look, I'll take it.
Nice.
I have no idea where it will end up. There was a moment there in January where it went from like 20 grand US to 40 grand US very quickly, and Bitcoin Twitter was about to lose its collective mind. So I just think we might have to delete our Twitter account if it gets to 90,000.
True. Okay, Ren. So we will put all of these up on socials.
Yes.
Just bang, bang, headline, bold predictions, and we'll keep track of them over the year. And also, if you have any bold predictions, as we said, plenty of ways to contact us. We'd love to hear them.
Yeah.
What's your AFL bold prediction?
Okay, so normally we do a generic, I say the Sydney Swans will win the flag and you say Essendon won't win the wooden spoon. Both very ambitious for our respective clubs. I'm not going to do a Sydney Swans one this year. I'm going to say Gold Coast, the only AFL team to never make the finals, will win a final in 2021.
Jeez.
Yeah.
Why?
I think they were looking pretty good last year. Matty Rowell, like there's a lot
he's
of
good.
Yeah. I don't think we should get too deep in the weeds on
okay.
why. I think
Sure.
there's a lot of people who don't like AFL who listen. So let's just make the prediction.
I don't think they'll win a final. Maybe they'll make the finals, so I'll take it.
Okay.
I'm going to stick with Essendon. I think they'll win the wooden spoon.
Oh, that's your prediction. Wow.
I think Essendon will take the wooden spoon.
If any Essendon Bombers listen,
Sorry.
Bryce is a fan, but
Yeah.
you should ostracize him from the
Yeah.
club.
I am a massive fan of the Essendon Football Club,
You've-
but I go in every year with lofty expectations and backing the boys in, which rightly you should as a supporter.
Are you backing the boys in?
I'm backing them, but I think they're just going. It's just going to be a tough year.
Right.
Yeah, wooden spoon.
I'd love to see it. I would love to see it. Oh, it's going to be a long winter for you, Bryce.
I know. Anyway, so you're going to take it?
Of course. Oh, well, no. Yeah, I'll take it just for the fun of the game, but I want it to happen.
Nice one.
Yeah.
Well, that brings us to the end of our bold predictions and the first episode of 2021. Thank you so much for tuning in, and we look forward to having a massive year this year. Just a reminder, Equity Mates doesn't stop when you have finished with this podcast. You can email us at contact@equitymates.com, follow us on all the social channels, or visit equitymates.com, particularly /contact if you want to leave us a voice message. If you're stuck for podcast recommendations as well, we do have the Get Started Investing for the Beginner Buffets. And our latest podcast is Comedian vs. Economist, where you hear comedian Adam and his brother Thomas break down macroeconomics in an easy to digest way. So if you're wondering what we're talking about with central banks and printing money and all that sort of stuff, head over to their podcast and they'll break it all down for you. But Ren, brings us to the end. It was fun. Stay tuned because next we have deep dives on our stock of the year.
Can't wait.
Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.